Hello everyone, this is Market Week in Review for the week of September 26, 2025. My name is Bei-Chuen Lin. I'm a Senior Investment Strategist and Head of Canadian Strategy here at Russell Investments. Today we'll be discussing three major topics. First, the ongoing resilience of the U.S. economy. Next, no negative interest rates just yet in Switzerland. And finally, we'll wrap up with a discussion of the risk of a government shutdown next week. So let's begin. This week we got more economic data. We got the third set of GDP numbers for the second quarter in the U.S., and those data points suggested that the U.S. economy grew at a pace of 3.8% annualized in the second quarter. Now, to put that number into perspective, in general, economists estimate that trend GDP growth is around 2%. So for GDP to have expanded at nearly double the pace of trend in the second quarter, that suggests that the U.S. economy is still in a very resilient situation. Meanwhile, when we look at other economic data points like initial jobless claims, those are still at relatively low levels and also suggest that the U.S. economy is doing well. Now, as we think about what might happen to the U.S. economy over the next 12 months, we do expect that the U.S. economy might see a little bit of a cooling, but that cooling will likely be towards a soft landing rather than towards a recession. Outside of the U.S., we think it might be a little bit of a different story where economic risks might be a little bit higher than in the U.S. So, for example, in Canada, we do think that the risk of the Canadian economy potentially dipping into contractionary territory in the third quarter, like it had been in the second quarter, is still quite elevated. However, when we look at the equity valuations outside of the U.S., whether it's Canadian equities, whether it's European equities, we do believe that equity valuations outside of the U.S. are more compelling than U.S. equity valuations, and that's one of the reasons why we've been relatively neutral in terms of our asset allocation across different geographies. In fact, even with the strong performance of non-U.S. stocks relative to U.S. stocks in the third quarter, we still believe that there is a valuation discount between non-U.S. stocks as compared to U.S. stocks. Second, let's talk about Switzerland. The Swiss National Bank held their latest monetary policy meeting this week. They decided to leave interest rates at 0%. So, in other words, no negative interest rates for Switzerland just yet. We know that Switzerland does face some ongoing economic headwinds, particularly as they are confronted with this 39% tariff against their exports to the U.S. Ultimately, the Swiss National Bank has said they do have a high bar for taking interest rates into negative territory, but they'll continue to be data dependent and adjust interest rates as needed to be able to maintain their mandated goals in terms of the economic environment. Finally, I want to wrap up by talking about the potential risk for a government shutdown next week. According to betting markets as of September 25th, 2025, markets expect a roughly 3/4 chance for a government shutdown to take place starting October 1st next week. Now, the historical experience suggests that government shutdowns are usually short-lived, with the longest government shutdown so far being only 35 days in length. And historically speaking, markets tend to look through these government shutdowns. Although there's always the risk that with equity valuations being on the high side for the U.S., we could see a little bit of return to market volatility if we do get a government shutdown, but once again believe that investors would benefit from staying disciplined, focusing in on the long term, and sticking close to their strategic asset allocation instead of focusing too much on some of the short-term market volatility and market movements. That's all for us this week. We'll see you next time on Market Week in Review.
Hi, I'm Sophie Antal-Gibert, Head of Portfolio and Business Consulting at Russell Investments. If you liked what you just saw and heard, consider subscribing to our YouTube channel or check us out on LinkedIn. Thanks for tuning in.